Beautiful. Okay. Thank you very much, Sean. Thank you, everyone. Welcome for another Wednesday session of our RM Smart Investing, our workshop class. And it's a subject that is pretty endearing to me. It's exciting. And I hope it will be informative and helpful for your future as far as your trading. And if not, hopefully it will just be informative to understand a little bit more about the foreign exchange, the forex, the currency investing. And with that in mind, let's go ahead and start. So most of you are familiar with exchanges. I mean, majority of you have traveled, you have to exchange one currency for another. You have sent probably money someone in another country. And basically, I thought this would be a timely subject because we focus so much on stock market. We want to understand there's a large, a big world outside of the equity markets. In the past, we've talked about commodities, we've talked about fixed income and bond market. So we talked about options, and I thought this would be timely to talk about foreign exchange and what is forex, what is currency exchanges, and the way that we can invest in them. Because of the depth of the subject, I thought it would be uh, uh, productive if we did two classes. This week, what I'm gonna emphasize on, it will be more on the what is Forex, what is the vehicles for investing in currencies, and then why we should even consider this. And then next week, what we're gonna focus on the strategy. So we're gonna talk about the how to invest and trade with them. We're gonna talk about as far as when we should be getting involved, and then who should be getting involved. So for next week, we get into the mechanics of it. Today, we're going to talk about actually the reasons for to consider the forex trading and investing and currency as a whole. So in today's session, what we're going to do, we're going to basically explore what is forex, why investing in currency and forex, why you should consider it, and then what factors affect the exchange rates. And on top of that, then we will look at ways to invest briefly. And then, as I mentioned, next week we dive in deeper. And then we talk about the forex pairs. What are those, and what does that mean when we invest in the forex? And then I thought it would be hopefully helpful to have the some of the terminology in the forex world. And at the end, we will talk about some of the top brokers around the world. Obviously, forex trading is very big in Australia, in London, in Hong Kong. A lot of, for instance, retired Japanese ladies, the widows, they love talking about forex. When you go to Middle East, they talk about investing about forex. So it is a big world out there. So with that in mind, let's talk about what is forex and what does it stand for. So forex, or foreign exchange, or FX, is a marketplace that the various national currencies are traded. So there is no centralized location, unlike like stock markets and the futures. And so basically what it is an electronic network that the banks, the brokers, the institutions, the individual traders, they deal with each other. So basically that's what forex is. And some of the roles that this forex market handles and has is, the big one is obviously transferring funds from one country to another. A lot of things, exchanges happen. It could be individuals, the governments, the corporations, but also we could use FX market and currencies and forex to manage the risks. It could be from the point of the trades. It could be point of investments, hedge funds. So that is managing the risk. But also we can use it for short-term credit function. And the last but not least, that most likely you might be interested, is the speculative purposes, how we can take advantage of the movement of the currencies to hopefully make it profitable in our investing and trading. A little bit of a history of the forex market. Basically, in 1973, President Nixon ended Bretton Woods and allowed to have the currency fluctuation and speculation. Remember, they were the fixed, and then it is allowed to be we were able to actually trade currencies. And in then 1996, there was the first trading platform was released, so we could have the forex trading. I've been involved, from the beginning actually, and I used to be up many hours during the night, and it was always something going on. And that's, you'll see, one of the most exciting part of forex being 24 hours a day. And then 2005, we had the meta codes release, so it allowed the retail investors getting involved. And then 2009, talking about currencies, it was the Bitcoins when it was released to the public. So let's consider why we even think about forex and the currencies in this situation. What is the benefits? The biggest benefit forex has, and that escapes a lot of especially retail investors, especially in the United States, because we are so away from, it's gotten much better away from the world, that it works on the currency exchanges. When you go to Europe, you go to Middle East, even 8, 9 year olds, they know the exchange rates. But the dollar being the king, when we are in the United States, we don't respect it as much as far as the exchanges. But now things becoming more globalized, and a lot of multinationals and people traveling a lot, they having appreciation. Well, what forex is the largest, by far the largest market, capital market in the world. This is as of end of 2019, beginning of 2020. The daily trading volume is $6.6 trillion, and it has increased since 2016 over 29%. And you shall see it's much larger than the futures market. So when we think about equities, equities are down here. We look at forex, we look at real estate market, bond market, the futures market, we look at options market. They are much larger than the equities market, but equities market are obviously, they're exciting, they're more accessible in some ways. So that's why not much talk is about other things, including the forex. Now, as far as the largest financial centers, it's London, New York, Singapore. And following up on that, you can see, just comparing the average daily trading volume. When you talk about Forex, it's $6.6 trillion. When you look at New York Stock Exchange, just in New York Stock is 22.4 billion. Tokyo Stock Exchange is 18.9 billion. And when we go to London Stock Exchange, it's 7.2 billion. So you can see there's really no comparison. I want to dig even deeper and look at the largest stock exchange operators in the world. This is as of January 2021 by market capitalization. And then we look at, NYSE and NASDAQ and Shanghai, and how they compare, and to to when we look at, which will be next, we look at the forex, which is in quadrillion. And this is basically, when you look at 24 trillion in NYSE, compare as of 2021, we look at 2,409 trillion dollars in forex activities, or I mean assets. And that definitely we have grown a lot since 2016, and it is again by far the largest as far as the trading volume, as far as liquidity, as far as the value. And with the stock market, with the futures, we could be open up to 23 hours, but really it slows down middle of, overseas, and after hours, it's very, with Forex, it's 24 hours a day, and it's continuous. And you shall see when we talk about the hours of the foreign exchange and how the things continuously trade. And as I mentioned, it is the biggest when we talk about the spot. This $2 trillion worth of transactions on a daily. And we look at the forwards, foreign exchanges, swaps is 3.2 trillion. The currency swaps are 1.8 billion, and options and others 294 billion. Don't worry about this, but these are all related. These are the corporations use these. So there's lots of money is being exchanged, and there's a lot of activities. So because of that, that makes it attractive because it allows you to be able to trade this market, as I mentioned, continuously with a lot of liquidity. So the main part of, I think, our class today will be what are the factors which affect the price of the exchanges or affect exchange rates. Why should we pay attention, for instance, to Aussie dollar, or why should we pay attention to Japanese yen or the dollar? So I put, there are many more, but I want to just put the seven main ones that I concentrate. And as a matter of fact, there's two really big ones that you hear a lot more actually these days. Number one is the central banks and their interest rate policies, how they control the rates. So basically, the, the interest rate is the currency of currency. It's the attractiveness. So if I am, let's say as a person, if there is a higher rate somewhere, I like to go and invest in with that interest rate to receive higher rate on my investments, whatever my savings. So when it comes to the countries and exchanges, currencies being their blood, and what they do, they want to find the best place. So if the rates are more attractive, interest rates are more attractive in one country, then that means that country is attractive to park the investments or the savings, and they actually start buying that currency so they can take advantage of higher rates. Now, for instance, you can see the dollar has had a nice move since, actually, when we look at the August, when we were bottomed, and with interest rates, and interest rates have been increasing, the flow of the money has been coming to the dollar. So that's one thing. And when you look at the dollar relative to many established other economies, which some of them still have a negative interest rates, then the dollar looks attractive. The second part is the inflation rate. So what is the sense of, if I can invest somewhere, but I know because of the inflation, my value of my money will be eroding in the future because of the inflation is higher than actually relative to interest that I'm receiving. So because of that, inflation, we call it the currency parities or interest rate parities. So these are the, the relative inflation should be manageable, so I could have some certainty knowing that my money, I can take it at a better rate in 6 months, a year, 2 years, 5 years, whatever it is. And that's what it's affecting. So inflation rates are very important. Now, I give you some examples. For instance, in late 1980s, in 1990s especially, Turkey was offering 85% interest on 1 year CDs. And sometimes even short term, you could get 70% on your savings account. But the inflation was over 90%, 95%. So what happens, obviously, that the value of Turkish lira was continuously depleting. So the central banks kept increasing the interest rates, but people knew that, they need a lot more money to have that purchasing power in the future. So Turkish lira, I remember the first time I was in Turkey, it was in late 1980s, about 1987, 88, $1 was 44 Turkish lira. By year 2000, in 2001, $1 was about 2.2 or 1.2 million lira. So that shows you how, because of inflation, how it was eroding. There was a joke that when the president was getting elected, he said he's going to make everyone a millionaire. So everyone was, carrying the bucket, the briefcases of money, because in order to just pay for the transportation, they had to pay 2 or 3 million lira. So everybody said, oh, we are goody, we are millionaires. But after that, by the way, after 2002, they had a default on their debts, and then they actually took the 6 zeros off Turkish lira. So that's why it's important to understand the inflation. And that's why when we had a hyperinflation in 1980s, for instance, with Brazil and Latin America, especially in Brazil, people would rather take the bus than the taxi, because with the bus you had a fixed price on the ticket you would pay it before. With the taxi, by the time you get to your destination, the value of money had gone down, so you had to pay more. So these are the effects of, again, the inflation on the currencies. The third thing is the political stability. Obviously, you want to invest your money somewhere that it has the stability from as far as the system goes, from the governing system, so you can have that trust that your money will be safe and there will be the stable economy and stable, again, the government. So that's another thing. So you want to look for countries that they've had, again, there's a free society, they do have a compliance, and it is something that's stable from the, again, from the political point of view. The fourth thing is the government debt. So a simple thing will be, if somebody has a lot of debt, usually cannot borrow money. So when you look at around the countries, you want to look at countries that they have the stability as far as they're managing their debt. Now, obviously, now we're in a situation that we are printing the money. Now the dollar, we shall see that being the reserve currency, that's why we have a lot more liberty to be able to print the money. But a lot of other countries, when you look at it, we look at Russia or Turkey and or Argentina, and there's just so much debt, then the value of that currency goes down to compensate for the risk that the investors are taking. Um, the other one would be, obviously, we will talk a little more, the speculation, supply and demand. People, they're the players, hedge funds, institutions, they play to actually profit from it. So there is this activities which dictate that the price of the currencies. So it's it's the market. um, the sixth one will be the GDP growth. Obviously, that the healthier the economy of that country, the better projections and better perspectives. So it is a place that you want to invest. So when the money is moving and going to a country that it's in a good shape economically, then there's a demand. In order to move that money to that country, that means you have to buy their money. So if I'm coming from Europe, for instance, and I want to invest, let's say, United States, because I feel the future looks better, I want to invest into real estate, I want to buy companies, I have to exchange my euro and put it in dollar. And by doing that, I'm buying the dollar. So because there's a demand on dollar, the price of dollar goes up, or the vice versa. The last but not least is the trade, which is very similar to just the example I gave you. When there is a trade deficit, when I'm exporting more, that means more money is leaving, because I have to pay my money, let's say dollars, to receive those goods. So when there is a deficit, that means I'm importing more than I'm exporting. Is that deficit? Usually that affects the price of the currency, or the value of that currency. So these are the things that I thought it will be helpful to understand how the factors affect the currencies and how that affects the forex. So before going any further, let's talk about, all right, we are excited, we want to invest in currencies, but how do we do it? So the title is Forex. So obviously that's one of the ways we can invest in the Forex vehicle that we will dig a little deeper. But you can also use futures market. So we have talked about the futures on equities, futures on commodities, but there's also futures on currencies. So if you don't want to play the Forex market, you could also use the futures market. You could also do exchange traded funds, which is quite a bit easy now, because we will discuss some of the ways, some of the ETFs available. So let's say you don't want to be investing in pure forex or futures, well, then you can play ETFs. You can also use options on the futures if you want to have limited risk, for instance, or you can use even options, and some of these ETFs actually do have options. The last the swaps, it's more of an institutional, it's a very large portion of actually currency trading and investing, but average investor doesn't get involved, so we won't discuss that. There's a currency swaps which happens all day with the companies and again banks and institutions, so we will not discuss that at this meeting. And mutual funds, there are few companies that actually offer you multi-currencies. They offer you for instance, you can have the dollar basket from PIMCO to John Hancock. There's a few companies that you can actually use if you don't want to use exchange traded funds. You're, you like to do mutual funds, then that's fine. There's also another way is there's some banks even in the United States that you could actually buy multi-currency CDs. So you can actually have a CD of Aussie dollar, for instance, or you could have Brazilian real or South Africa and Rand, for instance. So basically, these are some of the ways. So what we're going to focus on mainly on forex. Next week, I'm going to mainly talk about strategies of investing, the ways with mainly with forex, because again they're open 24 hours. But you can translate that and you can use it on futures or the ETFs if you like. So let's talk more about why Forex is attractive and some of the unique points about Forex. Now, one of the, as I mentioned, one of the most attractive things about Forex is the high trading volume. It's constantly is being traded 24 hours a day. There's billions and billions and billions, and you notice that $6.6 trillion. So that's a big attraction. The second part is extreme liquidity. So because of all that volume, there's a lot of liquidity. So you don't have market makers in the sense that you're dealing. So you constantly have, especially we will talk about the major currencies and how that works. So you do have tremendous liquidity on the majors. There we will talk about some other currencies, they don't have as much liquidity, but as a whole, the forex allows you to have liquidity. There's a geographical dispersion, and what that means is you have availability of trading in, as I mentioned, 24 hours a day, because you have different time zones, different for instance, you shall see with the times that Americas and then Europe and the Asia and Australia, there is always activity in those time zones. So while we are sleeping, Europe is open. When Europe is sleeping, Asia is open. So these are all constantly, there's a movement going on. So, and the other, as I mentioned, is 24 hours a day, 5 days a week. So we stop on Friday afternoon, and then the whole thing starts Sunday afternoon. Now, another attraction of Forex is the use of leverage, and actually a lot of it. So you could have small account and be able to control a lot of investments. So that's one of the attractions. And also it could be a setback, because when you have leverage, then you're actually increasing your risk as well. But with small amounts, you can, once you learn all the strategies, you might be able to actually grow your account. And a lot of, depending on your brokers, they require low margin requirements. So that's also another attractive, that you don't have to put it again, because of the leverage, low margins, you can actually control and a lot of different currencies. So it all depends on your broker. And also there is a mini, for instance, you don't have to invest, the full big account. I mean, a big currency. You can have the smaller currencies like the mini and micro. So there's a lot of ways with small amounts you can invest. And last but not least is the forex. As I mentioned, currencies are the blood of the world economy, so they are vital for the commerce. So they're moving, and they're always going to be there. Talking about the time, so let's look at what I meant by the geographical dispersion and how the times work. So these are all, let's say, New York time, East Coast time. And we're looking at Sydney opens at 5 p.m. New York time, and it goes on till 2 a.m. In the meantime, Tokyo opens 2 hours later at 7 p.m. East Coast time. London opens at 3 a.m. East Coast time. And then New York opens at 8 a.m. So you can see constantly there is a movement, and every time zone is there is something going on that you can actually take advantage of it. So make it a little easier. So you can see, for instance, Sydney opens at 5 p.m. East Coast time, and it goes till you, you can see up to 2 a.m. and then Tokyo and New York. And in this situation, you can see there's the overlaps. For instance, there's overlaps here. There's overlap with Europe and Tokyo, and then the Europe overlap with New York and London, which we'll discuss more in next week when we talk about the when of investing in Forex and trading actually in Forex. So when we talk about Forex, you always have a, unlike, let's say, the futures, which is centralized, I think Forex, you have a base currency and you have a code currency. So what does that mean? I mean, if you've been traveling, for instance, you go to Europe, well, you have a dollar and you want to buy euro or euro. So your currency, base currency is euro. You want to say, okay, I'm going there, I want to buy euro and I have a dollar. So how much 1 euro, which is your base currency, is, if I want to buy it, how much I have to pay in US dollar for 1 euro. And basically that coded currency, like today is like 119.30, for instance. So for 1 euro, you have to pay $1.19. Well, forget about the commissions and all the spreads, by the way. You end up paying 130, for instance, with all the commissions you have to pay at the airport. But anyway, that's here and there. Here is, as far as investing or trading, this is how the base currency and code. So base comes first, the code currency, the one that which is in dollar, is that's how much one of this is going to be worth as far as one of our code currency. The same thing if you do British pound. So that's the one that, again, we are buying British pound and we are selling the US dollar. We just want to know how much of US dollar we have to pay to get one of British pound. We will dive in more next week when we actually do look at some trades in Forex. So um, basically the dollar is the big, and as I mentioned, it's the reserve currency. So anything involved with dollar, they're called like majors. So major currencies. So what we do, 88% of the Forex traders involves the US dollar, because again, that is the reserve currency. So about 32.3% involves euro, 16.8% involves Japanese yen, and 12.8% is British pound, and so on. We have 6.8% Aussie dollar, Canadian dollar is 5%, and the Swiss franc is 5%. So you hear, like when you listen to the markets, they say, well, the dollar index is up. Dollar index is at 90.92 or 92. Dollar index just goes to 90 or 91. And what is this dollar index? Is basically a basket of different currencies, major currencies. And based on that, this index is formed. So with that, we can see what $1 is equivalent in basket of these currencies. And the biggest portion of that is the euro, which is 57.6% of the euro is considered that the dollar basket. Then the Japanese yen is 13.6, UK is about 12, Canadian is about 9, the Swedish krona is 4.2, and Swiss franc is 3.6. So basically you can actually even guesstimate when dollar gets weaker against the euro, you know, that euro has the biggest effect on dollar. So when you think back and you see, well, in the last 3 weeks, we're looking at the dollar has been getting stronger. On the other hand, euro has been getting a little weaker. So just based on that, you can see the dollar index actually gets stronger because the euro plays a bigger role in that basket compared to all other currencies. I hope that's helpful. Now, the most popular, when we invest in Forex, the most popular pairs that we're going to use, we call them majors. And basically, whenever there's a US dollar involved, we call them majors. So the biggest activity happens in US, which is in euro. So it's 24%. US yen activity is 17.8, and then British pound is 9.3%. So basically you want looking for the most active, most liquid. These are the pairs that, again, we will discuss the ways to do it, but these are the most attractive pairs that you can actually invest in, and that gives you the smallest basically spreads. Um, Again, Aussie dollar, if you're interested in commodities, for instance, commodities play for Aussie dollar or Canadian dollar, this is a good pair. If you're following the, let's say, crude oil, or you're following the natural resources, so that's what you play. And then, of course, with strength of the Chinese economy, we cannot ignore yuan. So the Chinese yuan, which even 10 years ago, it was not that. I mean, when you go back 30 years ago, there was no effect. 20 years ago, now it's about 3.8% of the trading. And again, we talked about the growth of the economy with the way China is. It's a major power. So that's why that you can see this 3.8% China, and then we have Swiss franc, which is a 3.6%. Um, I just want to have a little different visual again. So these are the Euro USD, a little more visual on a wheel, so you can see how are some of the top major ones. This part, it's so I mentioned the majors. There are the seven major ones actually. There's any currency which relates to USD, that the big currencies, that's called major. Then the minors are called cross currencies. It's the currencies that they do not use dollars. So it could be British pound, Japanese yen, for instance, or British pound and euro and British pound. So um, these are just some examples. And the reason I want to just give you a little more information. So for instance, in Forex trading, when we do British pound, we call it cable. Euro is euro, dollar yen, Swiss franc is Swissy. When we do Canadian dollar, we call it loonie. Australian dollar, when you hear Aussie, that's Australian dollar. When we do British euro and British pound, we call euro and sterling. So basically, when there's a, again, cross exchange, we use sterling Swiss or Swiss yen or sterling yen. One thing we didn't put here, and I used to trade this a lot, is New Zealand dollar, which is very much actually related to Aussie dollar. But sometimes, depending on the difference of the interest rates, sometimes one becomes more attractive than the other one, but they kind of follow each other pretty closely. So for like New Zealand dollar, it's called Kiwi. So when somebody says Kiwi, you know they're investing or they're trading New Zealand dollar. So here it is again with the currency pairs. First of all, the Forex is 170 different majors, minors, and we will talk about exotics. So there's just so many choices you have that you can actually play. And as I mentioned, the 70, the seven majors, we had the visually. So I just want to show you again this writing. Um, the minor currencies are, again, anything that doesn't involve the US dollar. So anything, we call them, again, cross currencies. So anything involved with euro and British pound and Swiss franc and Japanese yen. And then we talk about Aussie dollar, Canadian dollar, or New Zealand dollar. So basically, these are called minor currencies or cross currencies. The last but not least, and it has become a lot more popular because of the globalization, the growth of the emerging or developing markets, the frontier markets. So they're becoming more powerful with all the activity. So there's something called exotic pairs. And exotic pairs, as the name shows, they are not as liquid as, again, the majors. So but it's very much tradable. And although I wouldn't put like USD Hong Kong dollars and USD Singapore dollars, they're pretty much linked to US dollars, so they don't move as much, but they consider exotic. But the main ones are Turkish lira, which has been in the news. A few weeks ago, you could see how the central banks, the head of the central bank is resigned, so-called, or fired by the president Erdogan. So he leaves, the the currency drops. It's the fate in the government. Um, but you also have like South African rand. You have Swedish krona, Danish krona. So these are in rupee, for instance. So you can have all those that you can trade in. As I mentioned, the spreads could be, which is the bid and ask, could be wide, but there are actually, could be, if you're familiar with the economy of those countries, you could actually trade USD Mexican peso, for instance. So Mexico was actually, we've talked before, like we were watching during the election 4 years or almost 4.5 years ago. We watched the election last, and 6 months ago. Based on the movement of the Mexican peso, you could actually see that there is, they can be very helpful as far as forecasting actually for the equities and economy. I just took a picture right before our presentation. This is from TradeStation. So it shows you the cross currencies, that all the currencies, when the underlying dollar, or basically we have euro. So this is how it's read. Next week we'll dive in more, but I just thought, just as a reference, you can see how the markets move. And you can add, I didn't add the Mexican peso here, or Turkish lira. You can add, we can fill this out as in, we saw this about 170 major, but these are the 70 currencies being traded, but these are the major ones. So let's say I've heard this, like, again, I've done, you do futures markets. So a lot of people who do the futures, they prefer doing the currency futures rather than spot forex that we've been talking about. So what are the advantages of doing the futures versus the spot? So one of the things that the futures traders say is that these, one of the things about forex, oh, there's no commissions, but the spreads can go up and down. So it is, obviously, with euro being the most liquid, the spreads are narrow, but depending on the time of the day, they can spread. For instance, 8 or 9 at night, or 7 in the evening West Coast time, or let's say 10 o'clock East Coast time, really there's not much euro yen basically being traded. So we want to open the euro market. So most of the concentration is in Aussie, in Japanese yen, at the Asian market. So basically, all of a sudden, let's say the euro, or even euro dollar, the spreads get wider because of, again, the supply and demand. As far as the demand side of things, most people are preferring to trade the again, the Asian market. So yeah, I mean, once the Asian market closes, the European opens, we will get some liquidity, but perhaps it's better time to do Aussie dollar, or Aussie yen, or yen and dollar yen. So basically, because of that, there is a question about the futures traders say, well, each currency has, each pair has like a wide range of spread. So it's not really that effective in a sense of the economical way, without even, again, they say there's no commissions. The other thing is the cost of carry. The cost of carry is basically, if you leave a currency overnight, or when your trade is overnight, you have to either pay, or actually you could also receive the interest. Now, the interest rates are very low, so it's not as much. But let's say you're doing a cross currency, and one of you have shorted a currency which pays much higher interest rate. In that case, because you have shorted a higher rate overnight, you have to pay interest. So it's not just about exchanges, but it's about interest. It's almost similar to like dividends in stocks trading, when you do options on stocks, or even you sell options, or you are actually short the stock. So these dividends is similar to the interest, and that's called cost of carry, or maybe borrowing and or buying different currencies. The other thing the futures market traders say is like the transparency, because there's no centralized exchange, unlike like CME, for instance, or New York Stock Exchange or Chicago Mercantile Exchange. You don't know who's buying and selling, so there is no transparency. There's no central thing. So if you recall, in our trading with the futures market, we talk about gap. We can see the ticks. We can see with forex, you don't have any of those. So basically, that's another. They'd say it's a negative point about forex, but again, forex being so liquid. But that's one thing the futures market say. Well, we know where is the buying and selling, who are the buyers, who are the sellers. The volume data with the forex, there is no volume. At least there's a hidden ways that you could actually find out, but you have to dig for it. But with currency, I mean, with the futures, you immediately have access to the volume. And as a matter of fact, next week we will see, I use the futures volume to help me with my forex trading, because you can see where is that, if there was let's say there was economic news coming out, you can see the reaction from the futures desk, and perhaps that will be one way of um, uh, finding out what is the market reaction. The last thing they say is the diversification. So with the futures, you can do so many different asset classes that with the forex, you just on that, the currencies, the pair, you're stuck with it. You could buy 5 different pairs, but with the futures, let's say you can invest in euro, and but you can also, or a Canadian dollar, you can also maybe short the gold, for instance, for diversification. So these are the things that the futures traders suggest they tell against the forex. As far as the ETFs, most of you are familiar with exchange traded funds. So I just want to give you a list of these currency ETFs. There's about 17 or 18 of them. And with the biggest ones, and like the very slow moving, it's the Invesco's UUP, for instance, the dollar, that the basket we talked about. So that's the ETF. You can do options. FXC is the euro, FXF, for instance, Swiss franc, Y is Japanese yen, Canadian dollar, Aussie dollar, and British pound. So, and then we do have even Chinese yuan, or you have exotics. You can have emerging markets currencies. You can have double, if you can also short, if you are negative about euro, or you are negative about Japanese yen. So this is one of the ways that you can actually invest without going to the forex market if you want to. You can, again, there's no commissions basically with these ETFs, and some of them do have options on them that you can approach it. Some of the trading strategies that you've learned, you can use the ETFs, the currency ETFs. All right. I just want to dive in a little bit of, again, next week we'll talk more, but this is more of a just helping you out to understand a little more about forex and its terminology, some of the words that you might hear when the traders talk about, as far as the investing and trading in forex. So I just thought take a few minutes, just go over it. So what that means, well, the buck, I said the buck stops here. I was like, it was for the dollar, but it's a million unit in the forex language. The carry trade, basically, we talk about, but the carry trade is mainly we basically borrow at a very low interest rate, and invest that money in a higher interest rate. So many years ago, for instance, in 1990s, 1997, Iceland crown was absolutely wonderful. They were paying the bonds were paying 15, 16% percent. So people would borrow at Japanese yen, which, as you know, historically, it's been just really low rates because of, again, because of what had happened with the recession and everything. So we were borrowing and investing in Iceland bonds. So, things work till they don't work. Then in 2000s, we ended up doing the same thing with Aussie dollar and New Zealand dollar, borrow at Japanese yen. So basically this is called carry trade. So in a sense, borrowing at a low rate and basically investing it in a higher rate. And what happens is, if there is any type of a risk off, then we are worried about things not, the markets could be dropping, maybe the rates can go down. So if I'm investing in Aussie dollar, then I want to sell my Aussie to pay off my debt. And that's what you can see in the times of crisis or times of when there's people are a little concerned, Japanese yen actually it goes up because people are taking their money off their riskier assets, and either they're paying off their debts or they're putting it somewhere, and that basically that's a carry trade, that reverse carry trade, that they are actually selling, and that's where the flow of money goes to yen, paying off all those debts, and that's what the yen goes up. So cross, as we mentioned, is the minors. It's just anything, any two currencies that they don't involve the US dollar. Handle is, we will see what pips is. Pips is the smallest uh, uh, actually unit of any type of in the currency trading or forex trading. So every 100 pips in FX markets is it's called handle. IMM is International Monetary Market, which basically they are the futures market that it's good to follow some of their news and what they're doing. Fix is, so every 5 times a day, every forex trading day, there's a large amount of currency that must be bought and sold or settled for the commercial customers' orders, and that's what's called fixed. So Frankfurt is 5 a.m., London is 6 a.m. This is all New York times, East Coast time. 10 a.m., the World Market House Company. And then you can see we talked about IAM and ECB, which is the European Central Bank. So, and keep the powder dry. I thought it's like a trading language, and sometimes it's helpful. It's good. I mean, sometimes you have it in all the tradings. So you want to stay on the sideline, be patient, don't have to be always excited to get into the markets. So you keep the powder dry. That means stay away for now. Paneled is a very heavy round of sellings. This medley report is interesting, so a lot of people follow. It moves the currency markets, so you should look for that. Pips, as I mentioned, is the smallest unit of any type of the currency pair that we're using. So let's say for a dollar, euro dollar, remember $1, €1 is based on the dollar, so it's like 100,000. So one, and then it's the smallest one is a 1 pip. Reserve Bank of Australia is RBA. Slippage is by the time that you request, let's say, even that's what sometimes dangerous to do at the markets, because by the time you put the trade in, it might go your way or it might go against you. So let's say you want to buy euro at 119,200. By the time it goes through, it's 119,250. So that 50 is the slippage. SMB is the Swiss National Bank, and then spot price is the cash price, really. And the last but not least is yard. We talked about buck, and yard in Forex means a billion units. So, and you do hear that sometimes traders talk about that. Okay, in the interest of time, what want to finish it on the how to choose the brokers. So nowadays you have so many availabilities. There's a lot of actually platforms. They come with multi availability. For instance, Thinkorswim with TD Ameritrade, they actually allow you to do futures. You can do Forex actually. You can do Tastyworks allows you to do that. So TradeStation. So a lot of interactive brokers. So you have a lot of access. But specifically for the trading brokers for the Forex, there's a few ones that they only emphasize and they only work with Forex. So I just thought to review those with you. Before I do that, I mean, I just want to share this with you that this is as of June 2020 to see some of the largest, leading banks that they deal all the tradings. So you can see JP Morgan, UBS, and XTX markets, just between three of them, and basically, but Deutsche Bank, you can see almost 38%, 15, 20, 33% of 33, 34% of all the activities in the Forex market is done by just four banks. So that tells you how influential they are and how much activity happens. Um, Before I even go to more brokers talking about the who, so I just want to share with you some of the Forex traders demographics. 89.1% are male and only 11% are female, although the females, they make 1.1 or 2% more profits than males, by the way, in average trade. Um, Ages of 25 to 34 is only 5% of the traders, but the 34 to 45 is the majority of traders in Forex, and 15% um, over 45. So this is a list of the largest Forex brokers in the world. The IC Markets from Australia, the average trading volume is 18.9 billion a day. We have XM Group from United States, FX Pro. So there's quite a few in United States, but again, in London, there's a big ones, and again, Singapore, Hong Kong. So I just did just a review of some of the top brokers. So this is just for your own, you can dig deeper, as far as the scoring by the forexbrokers.com, a little bit about when they started, and as far as the tier one licensing means they're the highest, the most trusted, um, as far as the uh, activities that they're rated. So it's 6. So basically, this is just little ideas for you. I've dealt with, there's used to be forex.com, FX Daily, and I have accounts like with OANDA, OANDA. So there's few, there's Gain. So those are some of the brokers who are available. I also want to share this with you, basically the awards from, as far as different ones you can see, for instance, interactive brokers for institutional clients, and like eToro for traders community, and then IC Markets for algo trading. So Thinkorswim, for instance, for desktop platform, they were the highest rated. So anyway, just a little information for you. I went a little step further, so I want to look at some of the stockbrokers too, since we're talking about Forex trading. So I thought this might be helpful for, this is for 2021. And then like again, TD Ameritrade won the desktop trading platform. TradeStation had the technology. For instance, Robinhood had the investment community, and then Interactive Broker professional trading. So, and the TradeStation also crypto technology. They were basically rated the best. So anyway, I want to go a little further again. So this is from ICM. So they show you some of the, the pips for your, the spreads, and they have the best rates. So you can, again, look into deeper to those. And then from forex.com, which I'm familiar, some of the questions, what do I need to open an account? How much money do I need? I mean, some places they actually allow you to do $200, by the way. So there's, because again, we have the mini and micro, so you can invest in with any amount. The problem is a lot of people get involved with Forex with very little knowledge, because still it's trading. So they don't have that trading psychology built yet. And yet they get excited and they say, oh, it's only 200, it's only 500, it's only 1,000. And, okay, on 200, 400, you can make $50, $60, you can learn, but it doesn't make your wealth. By the time you get to 5 or 10 or 100,000, then you really have to have the foundation of the business and trading mind in order to become successful. So it it's a more of a, again, because of the accessibility, they bring in a lot of um, customers, but that spreads. They make their money based on the spreads, and a lot of people, they become discouraged and leave. So although it is attractive to start with smaller amounts, that could be also a hinder. And then, obviously, Forex.com offers 80 currencies. You really don't need to. You want to be in the very liquid ones, and they're 24 hours a day. The last, I just thought this is from the FinViz, just tells you you have access to all of these information on a free basis. Plus, again, if you have Thinkorswim, or any other platform, you're all available. So basically, I just thought take a picture of that. With that in mind, that's my presentation for today. So as I mentioned, there's a lot of information, so I couldn't do this and then add the strategy. So I hope this gave you a little better clarification of what we have, and as far as what Forex stands for, what is currency trading, what are the vehicles, and then by knowing this, and next week we can work on some of the strategies, some of the technical tools that we can use to make us better traders, whether it's the futures trading, whether it's the options or Forex trading. So with that in mind, I'll like to, we can start recording, Sean, and then open for questions.